Chevron's second quarter earnings took a substantial hit because of low oil prices, the loss of acquisition about Hess. But you know what? That doesn't matter. You know why? Because Mike delivered good numbers here. Joining us now, exclusive breakdown the quarter. Chevron Chairman and CEO Mike Wirth. Mike, you know I was supposed to have the day off, but I came to work because of you. How do you feel about that?
What? I missed that, Jim?
I came to work because of you. I had the day off.
Well, it's good to see you on a Friday, Jim.
Oh, that's a cheap shot right back. Hey, Mike, the growth here is pretty phenomenal. I was concerned at one point that Chevron was going to be just kind of 1% to 2% growth. But you did everything from get back into Venezuela to make a terrific acquisition with Hess to reveal some terrific numbers in the Permian. You are, I think, growing like a very small oil company. How did this happen?
Jim, we had strong execution in the quarter. We had record production, and that resulted in exceptional cash generation. We had all-time record production in the Permian Basin, averaged over 1 million barrels a day. We had all-time record production in the United States, which includes the Gulf of America. And we had all-time record production worldwide. Our refinery throughput was the highest in 20 years, and that resulted in free cash flow that was up 15% quarter on quarter, despite the fact that crude prices were down 10%. So strong execution, record production, and exceptional cash generation.
Well, let's talk about that. I've not heard you be extraordinarily bullish on the price of oil. If you can do that number, this number that was just reported, at this lower oil price, what would happen if oil went back to 80?
Well, obviously, things would get even stronger. The nice thing is we're positioned to thrive in all price environments. We've got consistent cost and capital discipline. This last quarter was our lowest CapEx in more than 2 years. We've got $2 to $3 billion in cost reductions that are underway. We've got leading free cash flow growth with $12.5 billion from 24 to 26 at just a $70 oil price, about where we are today. So that takes us from about $8.5 billion in free cash flow in 2024 to $21 billion in 2026. So we are hitting on all cylinders.
That is remarkable growth. Does it matter that the president is very pro-oil, very pro-fossil fuel in terms of your long-term planning? For instance, you have a huge Permian, but we need more natural gas pipe coming out of the Permian to be able to do more drilling. This is something the president favors. Are his policies having an impact on your 3 to 5 year out planning in this country?
Well, it's certainly nice to see an administration that recognizes the importance of American energy abundance. It underpins our economic competitiveness, our security, and increasingly, energy dominance is going to be the foundation for AI dominance. So we're seeing policies and actions that support investment in energy that will lead to more energy supply in this country, and I think that's good in the near term. And I think these policies will last beyond his administration in many instances and underpin investment well into the future.
Mike, you just mentioned $21 billion in free cash flow by 26. So what are you going to do with all that money? I mean, when you think about the allocation in terms of what you use it for, how does that get partitioned?
Well, we just had our 13th consecutive quarter where we returned $5 billion or more in cash to shareholders through our dividend and our share buyback. We've increased the dividend for 38 consecutive years. We've got a yield around 4.5% right now. We're buying back between $10 and $20 billion in shares every year. And we've got a balance sheet that continues to be very strong with 14% net debt, a AA credit rating. This will underpin consistent and reliable cash return to shareholders well into the future.
Right. So, yeah, that's a big number, and it's a big increase, as you just pointed out, from where we are right now to the 21 billion then. But how much of it's going to go back into the ground? I mean, you're doing 1 million barrels now out of the Permian. Can we expect that that will go up, or that you will spend a lot more on potential production from areas like that and or others around the world?
Well, we'll be investing to continue to grow production. We expect to grow production again next year. We've got projects underway around the world. In the Permian, we're actually going to begin moving toward a plateau. And the reason is, if you look at what smaller producers did the last decade, there was a lot of growth and there was very little free cash that ever came off of that growth. It all got reinvested. As we reach 1 million barrels a day, we can hold a plateau at that level for the rest of this decade, the rest of the following decade, and at a much lower level of capital spend, we can generate steady, reliable free cash flow for years and years and years to come, which further strengthens the balance sheet and it underpins those cash returns to shareholders, and we'll also use some of that cash to invest in production growth around the world.
Right. I mean, that makes perfect sense to me, and I would assume to your investor base. I'm not sure, again, back to what my colleague talks about all the time, that the president would be particularly happy to hear that, given he keeps talking about more and more U.S. production. Is that at odds with what you want to do when you're leading a company and you have to worry about your shareholders?
Well, our production in the U.S. is up on the order of, with the integration of Hess now, something like 60% over just the last couple of years. And so we're seeing all-time high production in the U.S. It's the largest single destination for our capital investment. I expect that to continue, and we will be a proud American energy producer and larger in the future. But we're a global company. We have opportunities around the world across the value chain, both upstream, downstream, petrochemicals, and so we'll continue to invest in other parts of our business and other parts of the world as well.
Okay, so Mike, you mentioned AI and that's a driver. I know last night on Amazon, I mean, the problem is they can't get enough power. Everyone's saying the same thing. I'm wondering what you can do about it yourself. I think that you have a little note here about LNG in your quarter, but you don't seem to stress what the role of natural gas in our superiority when it comes to AI. I always think you as an oil company, but you have used natural gas. What are you doing about that? And what are we doing about this 125,000 net acres of lithium in the Smackover formation? These are two things that the country needs you to do.
Well, let me start with AI. I've spoken to you before about the fact that beginning late next year, we'll take delivery on 7 of GE Vernova's largest gas-fired turbines. In aggregate, that's over 4 gigawatts of generating capacity that we intend to deploy here in the U.S. to support data center customers. We're in deep discussions with the biggest hyperscalers, companies you talk about every day, who need power, who are concerned about the ability to receive that power from an already strained grid. And we've got the ability to build this power off the grid initially, use it to support new data center construction, eventually likely tie it into the grid, but we can move fast, we can provide scale, and we've got deep experience in this. We operate over 5 gigawatts of power around the world that is necessary to keep our operations running 24/7, 365. So we've got to operate at grid reliability or higher to keep our facilities going. We can do the same to underwrite growth of AI in this country, and stay tuned. I expect later this year we'll have some announcements on projects we're putting together. On the 125,000 acres.
Yeah, you know what, Mike, let me
just touch quickly on the Smackover.
All right,
Jim asked about.
How can you not? Because, I mean, who wants to not say Smackover over and over again? Go ahead.
You can repeat it. This is an area that's got a rich brine deposit, so water, salty water, which has salts including lithium. And we've got an acreage position now that's fairly large that can be used to bring the water up, remove the lithium from the water, process that, and use that to feed into battery production. It's a market that is only growing as demand for electrification of all kinds continues to grow, and it leverages skill sets that companies like ours have in the subsurface and surface processing facilities. And so we're in a position now to assess that resource and begin doing technology development and considering future investments in the lithium value chain.
Real quick, Mike, to just conclude here, you know, the preliminary trade deal with the EU is going to more than double potentially their purchase of U.S.-based LNG. You just mentioned all the uses for it here as well in terms of powering data centers. Do we have enough?
We've got an abundance of natural gas in this country. We produce over 100 billion cubic feet a day right now. We can supply our needs, we can supply these new power needs, and we can supply LNG customers in Europe and elsewhere in the world. There's a lot of gas that comes along with oil production. And as we continue to develop the abundant resources, not just in the Permian, but in other parts of the country, we're going to see that we've got decades worth of gas production in this country that can meet our needs and our allies around the world.
Well, terrific, Mike. It's great to have you on this show. Obviously, a really, really good quarter. Thank you, Mike Wirth, Chairman and CEO of Chevron.
Good to be with you.